Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Tuesday, February 25th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 4 1/4 at 478 1/4. March soybeans down penny and 3/4 at 1027 1/4, and March Chicago wheat's down 7 at 572. No export sales again here this morning. We are through 15 of 19 settlements for our spring crop insurance discovery period, so we're getting right to the finish line here. Corn currently sits at 472 and soybeans at 1057. A couple things to note here, guys. This morning, another big drawdown in open interest. Corn was down 21,997 yesterday. Soybeans down 13,019. Also, big drawdown in the meal complex. Open interest down 14,363. Good morning, fellas. Hope everybody's doing well. Yesterday's news, again, continuation of good rains through South America. And then also, President Trump was asked by the press pool his thoughts regarding the Mexican Canadian tariff situation, and he commented that their full go, which would be next week, was when they were set to resume. So we'll have to see what happens there, but certainly a lot of weakness yesterday. I guess, Ben, kick us off with a few thoughts here this morning, and we'll throw around the room.
Yeah, option expiration last Friday, we saw quite a bit of open interest come up there. Time of the year where setback into March 1st is, I'm not going to say it's predictable, but it's something that we've seen numerous times in the past. We get to first notice day. Commercials all over the country are going to be calling people that have delivered on basis contracts and asking them, are you going to price or are you going to roll? So that, losing a little momentum, uncovering a little bit with options, and heading into first notice days lent itself to some weaker tones over the last two sessions in grains. Unfortunately, we did see a drop off in export inspections for corn that were somewhat noticeable, right? So we went from 1.623 the previous week to 1.1134 this last week. We did see an uptick in bean and wheat inspections. So we'll see if there's going to be some buyers that step in here on the break and take advantage of a flat price break. This morning, we're sitting about 27 cents off our highs and, kind of towards the very lower end of our recent trading range. Come Thursday afternoon, I think that the people that need to be out of the March contract will be gone Thursday morning, Thursday afternoon. And then we have to contend with the ag outlook for him as well. So just heavy, lost a little bit of momentum here on the shorter term timeframes, and we still have a big year in front of us. And I think that if you've been friendly corn, that this may be one of your opportunities to step in and participate. So we'll see.
Yeah, Jace, what do you think about this market?
Yeah, I think last few days we're trading what you kind of nailed it, right? We're trading tariffs, talks, weather in South America. I mean, I think a lot of damage has been done in South America. So I don't think the, trend line yield, huge crop, is out there, or at least the probability has come down quite a bit from hitting some of those bigger numbers. So I think we're trading some of that. I think this recent forecast, though, we're getting kind of dumped down south. So it makes sense that we've had this, continued bull market, buying spree, funds getting super long. So to have a pullback, not surprising. I think we secured probably more corn acres, which we needed to, through crop insurance, setting a high crop insurance price. We're almost done there. Mm-hmm. I think when you go look back at some of these, traditional kind of bull markets, which I think we're in corn especially, you got to expect some of these bigger pullbacks, so, and we talked about this on the show before, right? We traded March corn recently traded $5 and to have a 40 or 50 cent pullback and not even destroy the bull market is historically happened many times. Right. I mean, you go look at some of these years where we started at $4 corn and rallied all the way up to $8. There were some really huge pullbacks in those years. I'm not calling for $8 corn, but I don't think we put a high in, let's say, and I think we're going to trade this corn, bullish fundamental story for a while yet. So I think you're looking for big pullbacks if you want to re-own some hedges. I think you have to, obviously if you haven't hedged at all, you should really be, looking at your crop, stuff we've already talked about, right? Looking at your crop insurance, making sure that you're taking care of if the high is in, let's say, right? I obviously have no idea, but so yeah, I think it's beans trade technically really well, have been for a while, so we've traded up to the 200-day in November beans, in March and May, pick one, right? So I think it's a really good technical trade, so if you're looking at target orders, it's been really good to look at some of these moving averages. If you want to re-own some beans, looking at November beans right down in 1030 area to have some re-ownership, so I don't know. I don't think anything major shift has happened. We're trading headlines. Like I said, I think from a trader perspective, right? When I try to mix hedging and trading, I think playing from getting a plan together, right? So look for rallies to sell, look for breaks to buy, right? Versus the other way, right? Right? Instead of and this happens all the time. You have a lot of people who maybe haven't hedged a lot of new crop corn, right? But now they're kind of calling it in, saying, "Oh, I better hedge some," right? And we're on a pretty big break. So I think getting ahead of some of these moves and not trying to catch up, I guess, would be the way I would think about this market. I think we're going to be, we talked about this. Volatility is probably going to be around for a little while until we really figure out what we got going on in the world with tariffs and with the size of the South American crop and the size of this crop in acres, and still just a lot of unknowns. So I think that's just right for volatility for a while still.
And keep this market healthy. I mean, it's nice to see that we we, like you mentioned, we're trading into these technical levels, and it just feels really healthy, and there's a lot of participation, which is just what we want. Dustin, we're virtually set on our crop insurance, right? I mean, it's going to be, it's really very difficult to change that pricing here for the next couple of days. What's your thoughts now? At 1057 and 472, you look at the ratios and kind of what it's been telling. We've talked about it a number of times, but I guess what's your overall writing opinion is we're going to really write policies here next week, and be able to firm it up for guys.
Yeah, I think the lower deductible crop insurance policies this year, that might encourage some more corn acres in a way, just because you can set that price on a ratio that is, is definitely more favorable to the corn side, closer to that 2.2 to 1. Last year, I mean, we were at 2.43 to 1 on the ratio. This is beans divided by corn back in October. That was when beans were, $11 for November 25, and corn was quite weak. Now I think we have encouraged a lot of those acres to come back. I'd be curious to see what the USDA what the economists think in this Feb outlook for them. And of course, very curious to see where that March 31st survey comes in for planting intentions. But we've heard anecdotally a lot of guys that will be switching to some, additional corn on corn that they hadn't planned on last fall. And so if you go punch in 95 plus million corn acreage number, maybe even 96. What does that mean for beans still? I think that the market may be getting a little ahead of itself with the ratio when beans, also still need acres too. So to see that ratio come back up like it has the last couple of days, corn's been falling, beans have been holding steadier. We see that in the overnight market today. Not surprised to see that. If we go right back up to 235 or 24, it's still prior to the planting window. I'd probably go back to hedging beans again. But using the ratio, that's kind of a light way to try to have an opinion about the market, buy low, sell high type of an opinion, is picking the side that makes more sense. And then using crop insurance, like Jason mentioned, as a foundation, I think that's huge. So
what'll be interesting too, we get that March 31st, and certainly it seems like at least through the I states and the upper Midwest. I mean, we're going earlier and earlier every year. Certainly weather dependent, but it seems like guys are itching to get going. But should something shake out on that March 31st report, to your point, if you got some sort of a 96 million type of corn number, the job that Beans would do to try to maybe go get some late acreage, into the first part of April would be pretty interesting to see. Goes back to Jason's thoughts on volatility, right? Like, keeping your powder dry a little bit here and keeping yourself open to different ideas, I think is going to be uber important, so you've got some of that flexibility. Jace, we got a thought there?
Yeah, well, I'll tell you what, that March 31st report, trading it for a number of years, it seems to have a big move either way, either down or up, depending on the numbers. And then it almost always goes back. It's almost always a, in a trader, always a fade, right? So I've been kind of thinking through this, right? Like you see kind of the average guesses of, what are they for corn acres? 93.5 to 90, low end 95, high end. And Justin's mentioned before, I think we're already trading 95. I agree with him. I don't think 95 is that bearish. So I'd be curious to see if we do print something like a 95, if the market reacts negatively on that report. I think it's a buy. I don't think that's, and I think 93.5 is still really friendly new crop corn personally. And on the flip side, I guess if you print, you print a low acres number in corn, and we do have a really knee-jerk reaction higher, it very well could be a sell too. If we go run new crop corn up to $5 or above $5, that might be buying acres, even more acres than we need right there or something, right? So sometimes that's a fade. So I think you got to have a plan for this report. I really think it's a big report that you got to have, like we talked about, your crop. You have to kind of have your plan figured out, and then kind of go into that with how am I going to play this if it's a really bearish report or a really friendly report, as it relates to your goals as far as marketing and, obviously as a trader, how you want to play that as well. So that's what I've been thinking about.
Well, absolutely. I mean, like our philosophy, we look at it through our matrix, and it's like you build out both those scenarios, right? Like you look at a 350 environment at your yield all the way up to a $6 or $7 type of environment. And then it's setting that expectation. Is that an acceptable return? And, for where we sit today with what we know, and that's totally our philosophy. It's interesting too, just the setup of when the report's coming. We've talked about it, outside of the show, but having that report on a Monday with a full week to trade is going to be interesting. Generally it falls on a Friday afternoon, and then we close down for the weekend and have all weekend to digest. So it'll be interesting with everybody, around and in the market. So it should be interesting. Stay tuned for that excitement. We got a couple of minutes here. Ryland, yesterday, pretty strong bounce back here for cattle, which was nice to see. Welcome reprieve after the break we've been on. And then kind of a two-sided trade in the hogs. April was really just grinded lower. So what do you got for us here this morning?
Yeah, the report reaction was definitely on the firm side. I think just in general, you kind of come into this week, everybody was just kind of thrilled it wasn't a super bearish report. So we did see beef prices start to stabilize, choices up 296, select up 141. I mean, just overall, it seems like there's a lot more optimism coming into this week, just for that simple fact than not. And feeders really led the charge yesterday. It seems like some of the chatter about tariffs going ahead may make the feeder market a little nervous. So the auction prices have been firming up. So naturally, I think that's bleeding into the future side of the market. So we'll see if that continues. We really haven't seen too much on the fat side of things for cash, but we'd imagine that, hey, we wouldn't be surprised to see the market try to stabilize just a little bit if beef prices are going to keep on going this route. But yeah, on the hog side, really hoping to see some of that kind of bounce back, but we just really haven't yet. So new lows for the move here in April. I think just a lower cash market, down about $1.48, kind of soured that expectations, and the market really just kind of shrugged off the bellies being up 275 and carcass being up $1.36 in total. So still watching those numbers, but obviously we're going to get a lot of headline trade just from what's going on with the potential tariffs up ahead, some of the rhetoric surrounding that. So it's kind of a wait and see, and overall the trend is definitely negative, but waiting to see if maybe some of the fundamental aspects can kind of hold us for right now.
Oh, very good. Ron, what are your thoughts on out of China, with their government announcing plans to kind of oversee the hog slaughter and regulate production capacity? I know that we're always very cautious in terms of news stories out of China, but it kind of feels like some of that's starting to slip into the market a little bit, just in terms of what their overall capacity is going to be and what their production looks like.
Yeah, I mean, it sounds like their hog situation is still just a mess. They've got producers that are not necessarily profitable. They've been trying these support programs for years. So, I mean, it's really hard to take anything that anybody says with too much severity. Overall, it just seems like this is a longer term problem that they're going to have to face with their economy, just from the population, growth prospects that are there or non-existent. I mean, depending on what statistics you look at. So overall, it's something to overcome. I mean, it would be nice to see a little bit of trade, a little bit more export business in our markets. It just doesn't seem like they really need anything right now. So they're constantly fighting the battle of their own supply and demand issues. So I don't have a strong opinion about it either way. I mean, the pork is a big part of their diet. So, I mean, that can really fluctuate fast if they get a disease or, a real problem arises. And that can definitely come into our markets. It's just, we haven't seen that in some time.
Very good. All right. Appreciate the update there. Just came into the open here. We got March corn on the low, 476 is the last. That's down 6.5. March soybeans are down 4.5, 1024.5, and March Chicago wheat down 10.25 now at 568 3/4. We've talked about it quite a bit, but we are running a special through April 1st, 50% off for new clients coming in to work with us here at AgYield. Jack's got more info in the outro, but certainly we're doing a lot of analysis right now on crop insurance and how that integrates in with your marketing. So if you got questions, give us a call. We can certainly run through your individual operation, and we'd love to do so. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.